The pension funds. The pension funds, okay, they're not earning money at the pension fund nut. The main investment core, called the nut, is not earning money because the treasury bonds are not giving them much of a bond yield for income. So they're having to sell the nut in order to pay out for pension income. And it's depleting the pensions. In addition to that, there's a lot of rumor that some of the pensions got involved with the derivatives, and they're losing money in a big way, leveraged way. This is not in the news. Mm-hmm. And it's part of what I call scuttlebutt, grapevine, suspicion. Their losses are bigger than what would be the case if it were only from bond losses. Okay. It looks like it's something else. They're getting depleted. The insurance funds are in the same position. Some of the insurance fund losses are coming from life insurance awards, but it's kind of ironic now that they're claiming, okay, so let's just suppose someone gets vaxxed, a year and a half later, he has a heart attack and he dies. Well, the insurance company is saying, is that from the vaccine? The arguments are now being made by insurance companies that's vaccine related. And the pharmas and the doctors are saying, no, it's just a heart attack. So they're losing in court and the insurance companies are having to pay out. So the insurance companies are gathering together for their own class action lawsuit against Big Pharma, bringing to the court their own evidence. The point is that pension funds and insurance funds are being depleted for different factors. I mentioned what they are.
Okay.
The big banks, I mentioned this a couple times, the big banks are being depleted for derivative contracts, for bond losses, and the derivatives are essentially very heavily leveraged bond futures contracts and other vehicles that do not get much publicity on their structure. Like the
very few
euro
people
dollar
even
in
understand
Europe.
what they are and how they work. Right?
I can explain reasonably well what they are.
Well, I wasn't asking you to necessarily. I was just saying a lot of people.
Okay, I won't.
Yeah,
I won't.
I don't want to wear you out.
They're leveraged. They're leveraged financial instruments like futures. Some of them are futures in structure, some of them are not. Some of them are over-the-counter OTC, and some of them are not. But the leveraged derivatives have 50-to-1 or 100-to-1 leverage on treasury bonds. And on something that's very murky, I don't wish to talk about much because Rob Kirby was murdered for it, the Exchange Stabilization Fund. Don't want to talk about it. Do your own research. Mm-hmm. Didn't get it from me. Mm-hmm. Okay. The big banks are now in a position where if they declare bankruptcy and go through a dissolution, like a liquidation, lowest on the poll are your savings accounts and your certificates of deposit. They're going to go away. They're going to vanish. You're going to lose them. So if you've got a big bank account, and I was surprised. I had a number of client consults after a different show with Mike Adams of, the Health Warrior, Health Ranger. I had a number of client consults, and a good dozen or more had six-figure bank accounts at Bank of America or Chase or Wells Fargo. And I think they're all moving that money out. Because if there's a derivative event, let's just say Bank of America announces an enormous derivative event. They cannot manage it. They just lost $5 trillion. All of their depositor accounts are gone. Mm-hmm. Now, the 2007 Financial Regulatory Bill was a follow-up to the 2005 Bankruptcy Act by Baby Bush. And that Bankruptcy Act put derivatives at the top of the order. They call it subordinate. Your bank account, your CD is all subordinate to the derivatives, lower on the totem pole, layman's terms. And what that means is your CD is a loan to the bank. On the books, it is called a loan. It is called credit asset. And the credit assets are wiped out if a derivative accident takes place. So get your money out of the Wall Street banks. Get your money out of maybe the largest second-tier banks. There are a few of them. Just look of the banks that have derivative exposure and go beyond the Wall Street banks, and there they are. You want to be out of them too. Get out of them. Now, there are legitimate reasons for having derivatives. I'll give one quick example. You got XYE Savings and Loan out of Southern California, and they've got $100 million worth of mortgages. They've been around for 30 years, and they've got $100 million, not $100 million, let's say $60 million worth of derivatives to hedge their interest rate risk. And what do they not hedge? Their best AAA type clients. The ones that are not their best, well, we don't really know that guy all that well. We don't know that business. So let's hedge that. So they put up a hedge, and it's basically a futures contract to offset their risk of lending money. One side negates the other for risk, but it's not 100% because they have some good clients. Okay, that is intelligent, prudent, legitimate, honest, good business. Okay. The next big depletion is the Rothschild central banks. They're all reported to be insolvent. I think they're all going to vanish. I think right now we've seen the death of Evelyn Rothschild, and now we've seen the surrender of David de Rothschild. These are the French resident Rothschilds.
Mm-hmm. French wing, yeah.
I heard that Evelyn Rothschild, that's a man. I heard he was told, you take a suicide pill or we are going to confiscate your entire family asset base. So he took a suicide.
Wow. Okay.
But, you know, the Rothschilds played dirty pool. I think the White Alliance played some dirty pool. By removing Evelyn de Rothschild, they have one less big Rothschild, and they're still continuing with the threat. We've got an offer of something like, I think it's, I don't know exactly, but I think it's $5 trillion offered by David de Rothschild, and he wants amnesty for his vaccine and all the lockdowns and all the deaths and all the damage and all the business losses and destruction. And the White Dragons were the recipient of that offer, and they told him to go pound sand and eat shit.
Thank God.
It was so much deeper than that. The White Dragons have been subjected to attempted assassinations, and they actually said, in Fulford, they said, it looks like the motive of David Rothschild in France was to bring together a meeting so they could assassinate the attendees from the White Dragons. It was over 2 years ago or a year and a half ago, something like that. One of the representatives of the Golden Dragons was kidnapped and held for ransom. They tried to get codes in order to release trillions of money. Okay, this is a very deadly war going on behind the scenes, and we've finally gotten to the point where the dragons, both Golden and White Dragons, no longer trust the Davos and Rothschild gangsters. They don't trust them. So they're seeing a surrender, and they're really not accepting the surrender terms. The White Dragons have said the only way we can proceed on the planet is to kill them all. This is very, very serious, and we're at a late stage. The point here is that the Rothschild central banks are insolvent and they're being depleted. And they're going to be handed back to the individual governments as an empty bag, and probably with debt. It's already beginning to happen at the U.S. Fed. They're depleted. They're not earning any money. They got monthly losses that they're announced. I heard one month it was like $52 billion. Big money. They used to have profit that they shared with the U.S. Department of Treasury. Now it's the other way around because they shot themselves in the foot, in the chest, and in the balls with the economic lockdowns.